I would highly recommend jumping into a passive investment though. Read the Hands-Off Investor book and put $50K a year to start off with in these private investments, because the return is a lot better than the stock market, and your CFA won't tell you that.
This is my time. Hi, I'm Kyle Stephenson, and you're listening to the Assets and Orthopedics Podcast. In this forum, we hope to educate medical students, residents, physicians, and other high-income professionals on the power of investing, especially in real estate assets and syndications. We want to help providers gain financial intelligence with the hope of earning financial freedom. Please listen and learn so you can spend more time doing what you love with who you love. Enjoy the podcast. All right. Hello and welcome to the Assets and Orthopedics Podcast. This is your host, Kyle Stephenson. We have a special guest for you today. Dr. David Price is an emergency medicine physician based out of Atlanta, Georgia. He is also founder of Freed and Vestana Capital. Freed is an acronym for Freedom Through Real Estate Education for Doctors. He is not only a successful physician, but he has an impressive real estate portfolio, which we will discuss in detail today. We're grateful to have you on here, David.
Thank you.
Thank you for coming on.
Yeah, awesome to be here.
Yes, sir. So let's start with your medical background. Where did you train? Please tell us about your early career.
Yeah. All right. Well, thank you, Kyle, again for having me on. I'm honored. And I'm excited to share some knowledge and inspire some of your listeners. So, I went to UC San Diego Medical School, New York Medical College, and then residency in UF Shands, Jacksonville, and then did a fellowship in international medicine.
So I would love to know more about the fellowship. So you said emergency medicine, and then you did a fellowship in Mexico?
Yeah, San Miguel de Allende. And that's a huge passion of mine is international medicine. And why did I go to Mexico is a common question. And I met my mentor, and he is just, he's got a servant's heart, and he's doing some amazing things in the social entrepreneurial world. And so he inspired me to go down there and do the fellowship with him in San Miguel, and I was an EMT before med school. So I got to teach EMTs a course to them and taught ultrasound around Latin America.
That's great. Good. So, and I know that you do a lot of mission trips, right? And we'll get more into that later, but we'll definitely have to dive into that. Let's move on to investing. So how and when did you first get into just general investing? That's stocks, index funds, etc. How did you start with that?
Yeah, so I remember in college, I was on CNBC all the time, and I dabbled in stocks, and made some, lost some. I think I lost more, but it was really fascinating to me because you're able to just follow current world events and make money as well. And so I would say that we all in residency got advice from life insurance peddlers and financial advisors, and I got started into 401k, and I started LLC because I'm emergency medicine, so we're 1099, and I was maxing out my employee contributions, and what I never was able to do, I even got into Bitcoin, Forex options, lots of stuff, and I was never able to beat my ETF, Schwab, large cap growth ETF. So my CFA that I was paying all this money to couldn't either. So I realized I got to do it myself, and something else, another better way to do it.
Well, good. So yeah, with that being said, I know you're very active in real estate investing. So please give us the origin of that and how you got started in real estate.
Yeah, so I live in Atlanta, right by Piedmont Park, and it's pretty expensive real estate here, and great place to live, but pricey. So wasn't strategy, but it was a little bit of luck too. I bought my house in 2013. It was just a good time to buy, but I rented out. I'd say I moved up a level, renovated it, and then I rented out my basement in 2016. Spent about $60K for that, and then I rented it out for $2,200. My original mortgage was $1,700, and I was like, "This is great! I'm living for free, making money." and live on the park. So I started listening to podcasts. I paid off my loans and started listening to podcasts in 2017. I found it very difficult to do any type of investing, to be honest, until those loans were paid off. What type of psychological barrier that is.
Mm-hmm.
So through the podcast, I realized multifamily was the way to go. It was Michael Blanc was the first podcast that really inspired me, and I just soaked it up. There's so much free information out there: YouTube videos, podcast, books, everything. And I have a severe case of analysis paralysis, and it took me a couple years before I found my first investment.
Yeah, that's good. So to that point, were you listening to a lot of the podcasts, reading a lot of the books before you ever really jumped in?
Oh yeah.
After the whole, renting out your basement.
Yeah, for sure. I was looking for rentals as well, but just the numbers didn't make sense. I didn't know what I was doing. And I thought, well, I'm just going to go big and buy 100 unit. That's what I was listening to, is like, just go big on your first one. And so I ended up buying on the doctor mortgage. Don't tell my banks, please. But I bought two homes in 2018 on the doctor loan. And yeah, they really, as long as your debt to income ratio is good, they're happy. Yeah, so those went great, and that provided me the confidence to really go into real estate, because I knew that those were on 15-year notes, and including my primary home, and I basically had my retirement set. So I stopped. I won't jump ahead to the bigger stuff I'm doing, but I stopped contributing to my 401k in early 2021, and that was a huge lift off my shoulder when I was set. In 8 more years, I know that I'll have 15k coming in a month, and that was able to propel me into doing a little bit more and bigger.
Yeah, I would like to stay on this topic because our audience is young physicians, right? And so a lot of them are in residency right now, or just out of residency, and so they still have loans and trying to figure out how to pay those off. What do I invest in? If I talk to my financial advisor, they're going to tell me just to put it in the stock market, index funds, whatever. Nobody really advises on real estate. So the first thing that you touched on, your very first exposure to it, is essentially house hacking, which is, now it's become a very popular topic, right? But is that essentially what you were doing when you rented out your basement?
Yeah, exactly. I didn't even know that term back then, but yeah, that's really a amazing advice to younger people, especially because I don't think prices are going to come significantly down. We're not going to have 2013 prices for a long time, and that's the best way to do it, is make a duplex, triplex out of it, rent that out, and then all of a sudden you're paying $800 a month. I think it's really great advice.
So yeah, I mean, moving on, I know that you have, you obviously did single family homes, started with that, moved on to bigger and better things. Multifamily syndications is a big topic of this podcast. So please tell us about your experience as a general partner, as a limited partner. Just tell the audience more about that, and what are the benefits and really the negatives of both.
Yeah. So my first LP investment, well, I mean, just a quick recap: limited partners, of course, you're going to have limited control in the deal. You don't have any control. You buy shares in a bigger corporation, bigger deal, and you get a certain percentage of the return. The general partners put in an extreme amount of work to find the deal, source the deal, fund it. They go to all these real estate conferences. They get paid for all these advisors and lawyers. It's a lot of work. So they take they promote a certain percentage and of that deal, and the limited partners, they just put in their money and get their returns. So my first limited partner investment was a self-storage deal in Dallas, and this doc friend of mine, I've been following his journey for a couple years, and decided to throw in 50k to a self-storage deal and double my money in 12 months. And with the tax write-off, I remember getting 41,000 year one depreciation from my 50k investment. And so I ended up 2.2x my money in 12 months, and I paid 20%. I only paid tax on 20% of that. And I was like, this is amazing. Now those numbers are, it's not 2019, 2020 anymore, but different environment. But it really got my head spinning on the benefits of real estate.
Yeah. I mean, things have changed, right? And the market changes and it will continue to change. I think with the uncertainty in the current market, but there are some rumblings of some opportunities coming in the next 1 to 2 years. What investments excite you right now?
Yeah, so if you would have asked me this a couple years ago, it would have been rah multifamily.
Mm-hmm.
It's still pricey. A lot of people got in the game, and prices are still high. It is tough to run multifamily. It's like running a Waffle House. There's a lot of moving parts. There's a lot of newbies in the space, and new people that quit their W-2s. They're buying a 100-unit apartment building. They're like, oh well, I can do it too, and they're hurting now because they've learned that it's not easy operating. So I think this is the time to be creative, to think about other asset classes. I think multifamily is still the strongest. Don't get me wrong, and there's still deals to be had, but you have to provide other sources of income, whether that means on that multifamily property or other asset classes. Industrial is super strong, self storage is strong. I'm looking into RV parks and mobile homes right now, and just keeping abreast of zoning changes, and you have to be able to pivot. And I think that those are the people that are really going to really excel in this market right now, is branching out, networking, being creative.
Yeah, very good. I mean, my next question was going to be, what advice do you have for young physicians and other young professionals regarding real estate investing?
Yeah, so pay for good advisors. I think in the beginning I was a cheapskate, and my CPA was probably $1,500 for 2 or 3 tax returns, and yeah, just he was just a filer. He didn't give me any advice, and he tried to get me to buy some of his bank stocks, and he was buying a bank. And a good CPA costs a few $1,000s. Just know that, because it's just like in the emergency department, people think, oh, hey, can I get discharged early, because they think we're billing by the minute. If they leave in 45 minutes, the bill is going to be less than if they stay 2 hours. And you're paying for the experience, and these advisors, the real estate oriented ones, have so much knowledge, and they will save you thousands of dollars by getting a good one. The other advice, jump in early. I was in Jack's Beach, living in a suite 3 blocks away from the beach apartment, or it was a condo, and it was $325,000. I said, "Oh my gosh, that's so expensive," and I had no idea. I wish I would have bought, but hindsight, right? But jump in early, house hack like we talked about, so you can afford to be happy and be in a good area that you want to be in. I still, to this day, I'm 46 years old, and I still rent out my basement and I'm getting 2,500 a month. Um, my tenant's amazing. We travel a bunch, so it actually works out great. But time is on your side. I would highly recommend jumping into a passive investment, though. Read the Hands Off Investor book and put 50K a year to start off with in these private investments, because the return is a lot better than the stock market, and your CFA won't tell you that.
Yep, absolutely. With that being said, being an LP on a deal, and these young guys can learn from this. Don't just put your money in and sit back. You could actually be a limited partner on the deal, and you can ask questions. You could try to get involved just to learn the business from one of these GPs. They may, not all of them may let you, but a lot of them I think would, if you show interest.
Yeah, I think that is a great point, because you put in 50K the deal. I know my investors, they have my cell phone number. I help them with all types of stuff, tax strategies, asset protection, all the, I feel a kinship for my investors. I want to take care of them. And yeah, I think that's a great advice, is to jump in, invest, and, they'll probably be an informal mentor to you.
All right. So, as an emergency medicine doctor, you deal with horror stories every day. So, I'm not sure that this question carries much weight, but what is a horror story, if any, that you could share with us today regarding real estate? And hopefully, it's not the guy living in your basement.
Yeah. So yeah, he came out naked and he scared my kids. And so actually, last Christmas we were opening up presents at 1 p.m. And one of the pipe bursts in between the wall between our house and the basement. Okay, so dealt with that. 45 minutes later, got a call from my other rental down the street. That pipe burst. So I had two emergencies on Christmas Day. So, anyways, it's not for the faint of heart. I don't. I think that if you buy well and have good tenants, no Section 8, let somebody else, make a bunch of cash doing that. But our time, it's about return on hassle, right? So my personal portfolio, and we can get into the other bigger stuff, but my personal portfolio is my gold block underneath my bed. It's my bank. I can take loans from it. Helps me sleep better at night. It's my binky basically. But it's easy because my tenants are good. They all make six figures. Yeah, I'm not cash flowing, maybe 500 a month from each of them, but they are easy and it provides good tax benefit.
Good for we will get into tax benefits because I think that's very important. So that's going to be great point to bring up. The short term rental. So yours are all long term, correct?
Yes. The one I just bought November last year, I actually was going to make a short term rental. It's going to be an 8-bedroom, 6-bath, but I bought it in such a way that I had exit, possibilities. So it's zoned as a 2-family house, and basically I'm going to make it. It's going to be at least a duplex, if not a triplex, if I can make it happen. So yeah, I don't know about originally everybody was getting on the short term rental bandwagon, like about 2 years ago, and short-term rental tax incentive, but it's very saturated. It's very tough business to run, and the numbers aren't quite there as they once were.
Exactly. So yeah, that's what I was going to bring up. The short-term rental game 2 years ago was fantastic. COVID year, terrible, obviously, but then it shot up 21, 22, and too many people got into it. There is a tax benefit for physicians, but yeah, it's gone down quite a bit. So you're smart to turn that into triplex, fourplex, whatever you're doing. That's great. So I know that we've discussed this, you and I personally. You've been doing locum tenens. Please tell us a little bit about that and how it may tie into real estate and give you more freedom.
Yeah. So last couple years, I've been working part-time, and COVID accelerated everything. And I'm working about 8 shifts a month, and I absolutely love it. Everybody's so burnt out and at work and grumpy, and I go to work annoyingly happy. And because I love medicine, I still do. I just don't want to be working that much. And locum tenens allows me to kind of work on my own terms. I know it's overused, but it really does. Like, I don't work holidays, hardly any weekends. That flexibility gives me a lot more time at home. It's a lot more juggling. Don't get me wrong, but after I read the family board meeting book, I think it's Jim Shells is the author, and he teaches about the 18 summers concept, where you have 18 summers with your kids, but make them count. And the locums allows me to really be home to say prayers with the kids at night, the weekend sporting events, the birthdays, because being present is a priority to me right now, and yeah, locums helps me with that.
Yeah, I mean that importance of being around your kiddos when they're growing up. They're going to hit a certain age where they're like, I just want my friends. I don't want my parents anymore. So
Yeah, so maybe not 18, maybe it's 14, until they want to get away or something.
Exactly. Yep. We got to take advantage of it now, right? Well, we got it.
Yeah.
All right. So do you think, now you're in emergency medicine, locum tenens you can do with any specialty, but do you think it's sustainable for a physician long term, or do you think it's more temporary?
No, COVID was a little bit scary. It dried up, but a little bit. But I think it's here to stay. The same reason why multifamily and just being part of the rental economy is beneficial because, and while like RV parks too, but we won't get distracted. Is this mobile economy? Everybody, they don't have loyalty. They're kind of moving around city to city. Check out this, check out that, and I want to be part of that. And I think locums, there's a lot of groups. Not only is private equity buying a lot of them, and now you're just causing even more burnout, but there's just a lot of opportunity, a lot of movement, and in all industries. So yeah, I think locums is great.
Moving on, I don't want the audience to fall asleep on this next topic here, but I think it's very important. Essentially, if you pay 40% in taxes, then you're working for the government until about May 10th, give or take. So I'm currently rereading Tax-Free Wealth by Tom Wheelwright, who is Robert Kiyosaki's personal CPA. The more I learn about tax benefits of real estate, the more I get deeper into real estate investing. And contrary to popular belief, he talks about the IRS tax code that 99.5% of that tax code is advice on ways to lower our taxes. And one point I wanted to bring up before I let you jump in chapter 1 of the book, at the very beginning, he compares investing in stocks versus real estate. And I think this is geared towards physicians. And he states that when you add tax savings in the equation, real estate actually becomes a much better investment than investing in the stock market. So would you mind skimming the surface on some tax benefits of real estate investing and how everyone listening should really dive deeper into the subject?
Yeah, I think, well, first, just the tax savings and the depreciation you get on your K1 from that investment that juices your returns. I calculated it one time. It was like 3 or 4% of additional return just because of that tax savings. But, getting these advisors and advice from colleagues, and I started getting into land conservations few years back, and don't recommend doing that now. But you hear about these new ideas. I've even heard about a construction equipment leasing idea, and you're always going to hear about some idea, and it's just real estate is the only tried and true way. You want to like the oil and gas, again, shady characters, but the tax benefits are real. It's tried and true through the tax courts. A lot of other stuff hasn't. Real estate has, and it's put in there on purpose for our politicians, probably, but for us too. And unless you're on the small business owner side, I mean, that really is the benefit to our. Like Canada doesn't even have a 1031 exchange, but we have some very unique tax benefits, and why our ex-president hasn't paid taxes in so many years. And there's a lot of people that have these write-offs for years on end. Yeah, and 22 was the first year that I paid zero tax while still working part-time.
Love that. Zero taxes.
Yeah.
I think that should be mind-blowing to anybody listening to this, because, I mentioned on my last episode, but, I went to a real estate conference a month or two ago now, and majority of people there investing in real estate are paying minimal taxes. So mind-blowing for physicians, and it's something that we need to do a better job understanding.
And it's tough. I mean, it does help, though. I may say this with this caveat. If you have a spouse that makes a lot less and has the time to become real estate professional status, which doesn't mean you need a license, but you got to put in the hours, that is really the best marriage.
Yep, that's great. Yeah, my wife and I, this year we did the short-term rental to help our taxes. 2024, we had big plans for her to be real estate professional status, and we are pregnant with kid number 3. And I don't think the time is gonna happen. 750 hours.
Don't get me wrong; it is a lot of hours, a lot of documentation. I'm very detailed and obsessive about not getting an audit, and yeah, it's not easy. But if you're able to harness, it's great.
All right, so I want to shift gears now to something very important. certainly last but not least, or excuse me, last but certainly not least. How about that? I've noticed that you're very philanthropical. Having financial freedom is great, but using your time, money, and resources to help make a bigger impact in this world is what really gives purpose and true fulfillment. So, could you please explain the global health projects that you're involved in?
Yeah, so right now I support it more with my money than time. I wish to flip flop that hopefully in the near future, but I support PACE MD. They do some amazing work in Mexico with maternal mortality and these also courses. Haywood Hall, who's the founder and just great visionary social entrepreneur, it's part of Ashoka. Ashoka is it's the largest group of social entrepreneurs in the world, just doing some amazing things. Right now, I have shifted my time to really focus on finding the best operators that allows physicians to have that freedom to return to whatever makes them passionate, whether that's clinical work or volunteer work. That's kind of my focus right now. But I'd like to get back a little bit more time freedom in the future so I can actually make a physical presence and in these international projects.
Yeah, I mean, making a big impact internationally is fantastic. Now, you are making an impact in the physician space or in the with physicians all over the country. I know that you well, tell us more about Freed and how you're getting social media to help you create and set up meetups across the country.
Yeah, so I'm kind of a private person. I haven't expanded my social media presence, and I try to keep my daughters off of it as much as possible. But I found a lot of value in the local meetups that I put on. I put them on in a few states, actually, in cities, and looking for other cities. If anyone's interested, I'm always open ears. But there's something magical about getting physicians and breaking bread with them and sharing our knowledge and networking. Something better than what a webinar accomplishes. I really prefer the in-person meetups, and you really get to see your colleagues, the stuff that doesn't come up on shifts or in the hospital or in the lunchroom. Yeah, you like, wow, didn't even know you have this Etsy business, or whatever entrepreneurial thing you're working on. I think these meetups are amazing, and it really inspires. So I really try to do it. It's been a lot of tough one man show trying to arrange everything, but I'm going to get that going with some help. And so Freed is about taking the experts in this space, real estate, and they come talk, and then we network and ask questions, and it's only physician. There's nobody selling anything, and it's been great.
That's wonderful. I would love to get involved with that. I would love to learn more about it.
Yeah, let's do one in Charleston.
Yeah, absolutely. Yes. The more that we get out there, the more that we network, the more people you realize want to do this, or like want to network with each other. And then, to your point, you learn more about what somebody else is doing, and then you can learn from each other, bounce ideas off each other, be vulnerable because we're going through a lot of the same things. So, yep, that's wonderful. Good for you, getting yourself out there. So, in closing, I like to finish by asking my guests 4 final questions. What book are you reading right now?
So I forgot my book. We were in Italy for Thanksgiving, and I went to the bookstore there, and I best last minute decision. It's called Focus by Daniel Goldman, the guy that wrote Emotional Intelligence 2.0. Never even heard of it really, and it's been amazing because I have ADHD and always trying to get in my flow state and harness my focus. And great book. He's a cognitive scientist. The other book is Lovable by Kelly Flanagan. He's a PhD as well, and he teaches self-love, self-awareness. Yeah, my preteen daughter is going through some changes, and it's been challenging. So I'm really focused on being the best parent and husband possible. So I've taken a step back, and I did all the real estate books, and oh gosh, I mean, I could go through the list, but now I'm just like, okay, I'm going to focus on myself and set the foundation, and the business will grow.
Yep. And you also mentioned a book earlier, Family Circle or something of that nature.
Yeah, Family Board Meeting.
Family Board Meeting, yes. Okay, who's the author of that one?
Jim Shells.
Okay.
Yeah, super quick read. I think it's only 50, 70 pages or something.
Yeah, I mean, the reason that we're trying to do this stuff is to have more freedom to spend with our families, right? So it's very important. What advice would you give to your 25-year-old self?
Well, everybody said, get started early, of course, because it's a long game. Time's on your advantage. And if it doesn't work out, you can always go back and do shifts. But I'd say the best advice I got when I was 18 was surround yourself with A-class people. If you're in that group, you are what group you hang out, choose to spend your time with and your energy with. One thing that I have learned but still struggle with doing is blocking time for myself. It's really tough when you're just pulled in so many directions, but put it on the calendar. Take care of yourself first, because it doesn't matter how the job's going or the marriage. If you're not okay personally, I'm a big mental health advocate in case you haven't picked up on that. But yeah, don't let those people, keep you off your path. Find a tribe that elevates you. Make sure you're not coping in bad ways, alcohol, drugs, infidelity, all that.
Fantastic. All right. What is your definition of wealth?
It's not money. I mean, I think that like Maslow hierarchy of needs, you got to have the as a physiological or no the safety, the security, the psychological safety net first before you can focus on yourself. But I think the true wealth is self-love, self-awareness, but also, like I'm sure other guests have mentioned, time freedom. Know your worth. And, if somebody wants me to work a holiday, it's double time. Like I don't, that's it. I have non-negotiables. I don't miss birthdays, holidays, whatever. But, like I'm going through 2 rehabs right now, and I just picked up New Year's Eve. I haven't worked a holiday in a very long time, but they're paying me for it, so I know my worth. And having that time freedom allows me to do that.
What does retirement look like for you?
I think I want to get back to academics, to be honest. And I love teaching. I love being a change maker, and maybe I'll focus on financial literacy, go back to a residency and, work part-time. But I also want to create a legacy, maybe a foundation. I want to return to international work. But I'm going to be working till probably 65. I'm pretty happy what I do. I do it all over again.
Good for you. You obviously want to make a bigger impact than just yourself. So I love that. It's very obvious from the conversation.
Thank you.
What other topics do you need to bring up? Do you have anything on your mind? Real estate, taxes, medicine? Any last things?
Yeah, I mean, also asset protection, I think I don't want to dive, that's another topic for another day, but, make sure you're well protected. I work in different ERs, and I've come across not just one, but many ER docs that are 60 plus, working 18 shifts a month, and just burnt out, coping with whatever bad substance it may be. But and it's usually always revolving a couple ex-wives and expensive, needy kids, and now they're stuck. And I try to. You got back. You to ask me about what would I tell my 25-year-old self is I didn't realize the taking care of yourself part, because that if you don't, then you lead to bad financial decisions and work until you're 70 because of certain decisions in life.
Yep, that's great. Well, David, I really appreciate you joining us today. You're an inspiration to many, including myself, and I will continue to learn from you. So thank you very much for being on. And where can people find you?
Yeah, I'd love to meet up with you. I do meetups here in Atlanta. I would like to, if you have a group that you'd like me to put one on in your city, please contact me. My website is get-freed.com. And my email is dave@get-freed.com. And then I have a Freed Facebook group too. That's physicians only, kind of a safe space. And I'd love to help out if you guys need help with taxes, reps, asset protection, whatever it is. I'm here to give and here to help.
That's great. You have a good resource here with Dr. David Price. So thank you very much for being on, and we'll talk soon.
Awesome. Thank you, Kyle.
Thank you.
This is my time. I'm on the rise. Can't hold me down.
Thank you for listening. If you found value in today's podcast, please leave a review so our community can continue to grow. If you would like to stay connected or receive a copy of your free investing ebook, please go to www.sharpinvestmentsllc.com, and that's sharp with a P as in professional. This is not financial or tax advice. Please consult with your financial advisor or CPA.